Friday, April 12, 2013. Welcome to Conversations, the official MTA podcast. My name is Alex Spiroglou and I'm joined today by Ernest Chan. Ernie is the managing member of QTS Capital Management, a commodity pool operator, and will be presenting to the monthly meeting of the UK chapter of the Market Technicians Association. Ernie has worked for various investment banks, Morgan Stanley, Credit Suisse, and hedge funds, Maple Ridge, Millennium Partners, Maine, since 1997. He has received his PhD in physics from Cornell University and was a member of IBM's Human Technologies group before joining the financial industry. He was also co-founder and principal of EXP Capital Management, a Chicago-based investment firm. Ernie is also the author of Quantitative Trading, How to Build Your Own Algorithmic Trading Business. Was published by John Wiley in 2009. Now, Ernie's presentation to the UK chapter would be backtesting and its pitfalls. Backtesting is a key ingredient of algorithmic trading. There are, however, many ways in which errors can be introduced into a backtest. These errors typically inflate backtest results and lead to overconfidence. This talk will give an overview of some of the pitfalls and methods to avoid them. As always, both the presentation and the interview itself have been videoed and are available to watch at the MTA website along with the archives of all the UK chapter monthly meeting technical presentations and presenter interview videos. Without further delay, let's welcome Ernie. Ernie, welcome to the show. Thank you so much.
Thank you for inviting me.
For coming all the way across from Canada, if I'm not mistaken. I would like to begin with the first question, which is, can you please give us some information about your educational and personal background before getting involved with technical analysis?
Sure. I graduated from Cornell as a physics PhD, and as with a lot of physics PhD, we don't do physics afterwards. We look for greener pasture, and I found that in IBM's research in speech recognition and information retrieval group. So I spent a few happy years in IBM, and the sort of knowledge base in IBM is very much geared towards detecting patterns using statistical methods. And a lot of people in that group find that this method not only is very useful for detecting speech, but also applicable to the financial markets. So I also, after working there for a few years, I went over to Morgan Stanley and tried to apply my knowledge to the stock market and other financial markets at that time.
Okay, and how was your first involvement with technical analysis? I mean, what was your first, when you first heard about it, and also did you learn with a mentor, or did you do it on your own?
Well, when I joined Morgan Stanley, certainly my manager there is quite an expert in various technical indicators and analysis techniques. So he started me on that road and got me familiarized with the different indicators, which we use as input to some fairly fancy statistical algorithms, things such as, of course, neural networks or genetic algorithms and so forth. So technical analysis is serve as an input to our very complicated techniques that will perhaps spit out a trading signal.
Correct.
Yeah.
So could you please give us a description of your day-to-day responsibilities, of your current responsibilities where you are at QTS Capital Management, and what is the most challenging aspect of your job?
Well, my main job I view as, first of all, to operate the strategy, which is, of course, fully automated. Nevertheless, I will have to serve as a risk manager to make sure that it doesn't crash for some unknown reason. So, basically performing my diligence as a money manager for other people's money. So that's my first and foremost responsibility, is the daily operation. But other than that, we also need to keep ahead of the market by researching new strategies, because no strategy can work forever. And we want to be able to introduce new strategy all the time to get ahead of the curve. And so my second major responsibility is to research new strategies.
Okay. And fourth part of the interview, it's usually called the toolbox. Could you please give us, talk up to us about your favorite tools and techniques? For example, which technique do you specialize in?
Well, first of all, literally, my toolbox, I use a platform called MATLAB for backtesting all these strategies. And MATLAB is great because it has a lot of toolboxes. And one of them is called, for example, the financial toolbox, which has all the technical indicators that anyone has ever heard of. And so you don't have to write yourself, and you can just use it call it as a function. So that's why I do most of my research in MATLAB. But beyond that, I actually find that my inspiration comes from reading a lot of academic journals or academic papers, academic research, and trying to get some ideas about some fundamental inefficiency in the market, which we can exploit with very simple technical indicators. So I find that you don't really need to have very complex combination of technical indicators in order to capture those inefficiencies. The first thing is you have to understand where the inefficiency comes from, and then the simplest indicator, like for example Bollinger Bands, would be able to capture those inefficiencies.
I don't know if you will be divulging something too proprietary, but maybe you could talk about something, for example, your definition of an inefficiency.
Well, let me think of a inefficiency. For example, we know that certain, let's say the stock market tend to mean revert after a big drop. So especially, let's say at the open, if a stock market, if a stock gap down a lot at the open, there's it's highly probable that it will mean revert and rise up to the close at a higher price than the open. So one of the technical indicators we could use is just based on the Bollinger Band to see if at the open it hit the lower Bollinger Band, and if so, we would just get into a position. So it's nothing fancy, but you do need to know this general phenomenon that they tend to have a mean reversal from the open in order to capture that.
I see. And how do you approach, what's your approach when looking at the chart? For example, I from off-camera conversation, now that you trade Forex yourself, for example, if I ask you to look at the euro-US dollar exchange rate, what would be your methodology to approach the chart?
Well, first, my methodology will be to read ferociously on everybody what they say about this market, and that is not limited to academic publication, but also on what other people, other traders wrote on their blogs or in their books, and get some sense of how this market behaves. Does it, for example, always spike up after a certain rate decision announcement in Bank of England, or in the, if the US Fed says make a rate decision, does it move this way or that? Under what circumstance is there a predictable pattern that come up? And so I typically do not look for this predictable pattern just from a technical perspective. I want to know, what are the events that might drive it, and then I would apply simple technical indicators to capture that kind of event.
Mm-hmm. Okay. Which have been your greatest influences so far? For example, if I asked you to pick your top 3 technical analysis books, which ones would this be?
Well, it's actually a bit hard to say, because I don't follow any particular guru. I don't follow any particular paradigm. I read very broadly, and I absorb every technique that comes my way and synthesize it as my own. So I wouldn't say that I have a you know, a favorite trading book of any sort. You know, it's actually some of the best trading book I read about is not directly related to technical analysis. That would be, for example, a book on options written by Joan Sinclair. I find it very well written, but it's really not about technical analysis. But it does give you ideas that you can use to trade the cash market, even though it's about options, for example.
I see. In that case, can you also give us some information about your book, your quantitative trading, how to build your own algorithmic trading business?
Yes, that book is really written for people who are not really already in quantitative trading. They may be technical analysts, or they may be even discretionary traders, but they are curious about what kind of techniques that these so-called algorithmic traders use. And so I outlined some of the basic steps that you need to take to approach a strategy like a quantitative trader, and mainly in what are the ways that you can backtest it, and what are the pitfalls that you will encounter when backtesting a quantitative strategy. Yeah.
Okay, and technical analysis principles. If you could distill your market knowledge, your philosophy, the synthesis of the aforementioned techniques, and create some axioms, for example, you know, don't fight the tape, or for example, regarding to sentiment, which would this be?
Okay, I would say know who your counterparty is. You know, of course, in trading, you don't, you know, in trading in the securities market is not buying something from the fish market. You don't know who is selling it to you, but you can guess who is selling it to you. Is it another retail trader who is selling it to you, or is it the case that you know, really a big bank is selling this to you? And depending on how good your guess is, depending on the circumstance, you have a better chance of knowing if your trade is going to be profitable or not. Because typically, if the other side of the trade is a very informed trader, like a major bank trader, chances are you know less than he or she knows, and you are not likely to be successful in that trade. So I think it is a lot of times there are ways to determine if this trade exists, you know, the other side of the trade is informed or not, and that's my principle in driving my strategies.
Okay, if you could give a call to 25-year-old Ernie, what advice would you give him regarding the financial markets and entering the financial services industry?
Mm-hmm. Well, I think the main advice is that reduce everything to its simplest elements. Do not think that just because you know a lot of techniques in mathematics or in computer science that you have to use them. Chances are you should forget most things that you have learned in school and start from the basics, and you'll be more successful.
Good, and that brings me to the last question. Fun fact, how does Ernie relax outside of market hours? Do you have any hobbies?
Well, I have perhaps too many hobbies to list in one minute, but I do enjoy swimming a lot as a way to take out the stress in the middle of a trading day.
Okay, good. Okay, thank you very much. Thank you much for the interview. And that wraps up today's MTA podcast. My guest was Ernest Chan. For the MTA, I'm Alex Piroglu, and I'll see you next time.